Okay, it's now 9 o'clock Pacific Coast time, so we will get started. I want to thank you for attending. I look forward to sharing with you how to successfully plan long-term care for your clients. I am the long-term care brokerage director here at BackNine Insurance. We are a general agency focusing on simplifying the selling of life insurance, long-term care, disability, and annuities. So let's get started. My intention today is to help you successfully and easily find a solution for your client's long-term care plan. So let's start out with, what is long-term care? Any care that requires 90 or plus days of care. It's not old age care, as many often refer to long-term care as, but it's rather a long duration of care. So how does one qualify? If you are in a situation where you need 2 out of 6 activities of daily living, basically how you start your day. If you need help with either transferring, toileting, bathing, dressing, eating, or if you're incontinent, if you required assistance with 2 of these activities for 90 plus days, you are in a long-term care situation. In addition, if you are suffering from cognitive impairment, independent of these activities of daily living, you are also in a long-term care situation. So let's say, for example, you ride your motorcycle, you miss the curve, you fall off, and you break your back. This is not old age. This is a long-term care situation requiring assistance because you're in this situation for, let's say, 6 months. Therefore, a 25-year-old can be requiring long-term care. So where can long-term care be provided? It might be in your home. It might be in a daycare facility. It could be in an assisted living, or for the most intense care in a skilled nursing facility. So why plan? In our world today, over 70% of those 65 years or older are now receiving long-term care. Why is that? Probably because medicine has done such a great job keeping everybody alive. How long are they receiving care for? If they move into facility, they are receiving just less than 3 years of care. If they get to stay in their own home, the average duration of time is 5 years. However, if they are suffering from dementia or Alzheimer's, the average duration of time could be 10 years. Medicine has done a very good job keeping people alive. So how do you successfully plan for long-term care? In the past, family took care of each other. Families lived close to each other. They lived in the same neighborhood. The women didn't work. Is that a way your client can take care of their long-term care plan? Or maybe the government does offer plans. We'll go over what is available. You can remain self-insured, as what you currently are doing today if you do not have insurance. And we can look at insurance products and see if there is an answer to solve the individual's concerns. So let's look at family. These are the questions while you're sitting with your client that you can ask to start the conversation. You don't need to answer, let them answer for you. Ask them, what would that do to your family if they were to take care of you? Are they busy working? How would that affect their income? Do they have the skills necessary to take care of you? And are they aware that those who take care of others end up compromising their own health? I guess the ultimate question is, does your family really want to stop what they're doing and focus on taking care of you? Remember, it was somewhere between 3 to 5 years of care. Now let's look at the government. What's available and offered by our government? Once you turn 65, there's a program called Medicare. This is how Medicare works. If you have a situation where you need assistance out of those 2 out of 6 activities of daily living, and you end up in a rehabilitation facility, the first 20 days there's 100% coverage. The next 80 days there's a daily deductible, so people have Medigap coverage. But on the 101st day, you are on your own. Remember, long-term care is 90-plus days, so this is our government's short-term care plan. There is a long-term care plan. It's called Medi-Cal in California, Medicaid in the rest of the country. And you must financially qualify. You may not have equity greater than $700,000 in your home. You may own a car. You may not have assets greater than $2,000. This means any retirement, vehicles, any pension. Those will keep you from being eligible. And then once you have used Medicaid, the government will do an estate recovery, selling your home and recouping as much as they can from what they spent on you. So let's look at remaining self-insured, which in essence is your client's current situation. If you, as their advisor, do not bring up the question, how are you going to plan for your long-term care needs? Today, the average monthly expense across the country is $6,300, which gives you an annual expense of $75,000. So let's say your client is 50 years old. You go 30 years into the future, target age being 82. So in the year 2035, it's somewhere around $19,000 a month, $250,000 a year. Remember, the average duration of time one requires care is somewhere between 3 to 5 years. So let's just take 4 as the mean times the $250,000. Each individual conservatively needs about $1 million available to them for their long-term care needs. Now let's look at insurance. What is insurance anyway? People work hard, they plan for their retirement, and insurance is their way of protecting their hard-earned savings. Everybody is comfortable with homeowners insurance, health insurance, car insurance. Hopefully they've protected their income, which is a great conversation for you to have as their advisor, and life insurance. But what they have not done, and why you are sitting there, is they have not taken a look at their long-term care protection. So the question is, are you thoroughly protecting your client? Now they are protected. Let's look at this again in a different visual. They have homeowners insurance. 1 out of 1,200 individuals have a claim with a fire. They have auto insurance. 5 out of 1,200 have a claim. Catastrophic illness needing hospitalization, 105 out of 1,200 have a claim. Requiring long-term care, 720, once you're past the age of 65, out of 1,200 have a claim. Over 70% of the population getting past age 65 is at risk. If they look to their partner, one of them will be in long-term care. So how do you successfully create a plan that meets their needs? You customize. You work with your client. You don't need to come with your idea. Be open to their idea. Discuss the various ways you can create a daily benefit. It could be anywhere from $50 up to $500. Let them tell you what they are comfortable with, what they have experienced with their family and friends. Ask them if they like to keep up with inflation. Of course, it's all going to be predicated on how old they are when you get together and start customizing their plan. How long are they willing to wait, use their own monies before the insurance carrier starts paying? How comfortable are they with the amount of money available for what duration of time? Are they happy with a 2-year coverage plan? Nothing wrong with that. They've now taken care of their family for 2 years, enough money to last 2 or maybe 3 years, and they have accomplished their goal of having a plan in place. If they are in a relationship, are they more comfortable being able to share benefits with their partner? Remember, 70% of us need long-term care, so the idea of sharing benefits covers both of you. Just in case one does not need it, the other one now has double the benefit. And what if they are fortunate enough not to require long-term care? If there is that concern, there can always be a death benefit offered. So the key to successfully planning long-term care is to look at the various types of long-term care insurance products out there. There is the traditional long-term care, where you put together the different components as the different variables we had just mentioned with great tax advantages. Mutual of Omaha, Transamerica, John Hancock, Mass Mutual, Genworth, Life Secure. There's a variety of long-term care carriers available. Depending on their concerns, will help orchestrate which carrier you use. There's also the concept of buying a pool of money, a death benefit, attaching a long-term care rider. So this is, in essence, life insurance with living benefits. While your client is alive, they can use the death benefit to take care of their long-term care needs. And then there are hybrid products. Similar to life with long-term care, has a greater emphasis on long-term care. So you leverage your premium going more towards long-term care, but if you do not need it or only use a part of it, there is still a death benefit greater than the initial premium. The main concern in how to be successful is you must pre-screen your client's health. That will also dictate which product you should be looking at. I'm here to help you customize a plan and ask the right questions. In this slide, you can see that everyone is unique on what they are concerned about. Take the time with your client to ask them, do they want unlimited pay? Have it over with in 10 years. Great idea if they have a business that they can write the premium and take a tax deduction. That goes for the next idea down there with the tax advantages. Are they concerned about making this a win-win out of their business? Do they only have money, qualified money in a retirement plan? Then we'll know which product to look at. Are they considering living outside the country? Are they in a relationship where they would like to share the care with their partner? Are they concerned about having flexibility to have an informal caregiver, such as their housekeeper or a relative take care of them? Are they concerned that they want to have a death benefit if they never use long-term care? If they're fortunate enough not to go through a long-term care event, then their dollars can go to a death benefit. And of course, come up with a plan that keeps up with the cost of care. So there really is only one question to ask your client to have a successful long-term care plan. Does it make sense to use insurance to cover some or all of your long-term care needs? Because in essence, if you don't allocate money to long-term care insurance, you have allocated all of your money to long-term care. You will have to look at your savings and be ready to spend it. Thank you very much for your time. If you have any questions and if I could be of any assistance, send me an email or give me a call. I'll help you walk through the different products according to your specific situations. And I hope this is advantageous and beneficial. And keep in mind, the first step is to find out the health of your client. Ask them what medicines they are taking. Once we have that, we will look at the appropriate product to successfully plan for long-term care. Thank you.